some things hit my take profit, some of them hit my stop loss. But I think I enjoy it a little bit. I think I enjoy it more than trading view because I was able to see.
Trader Casa um, is for back texting. You don't want to go
Yeah,
for trading view.
yes,
Yeah, you understand.
yes.
So okay. Um um the 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 pattern that we're following is very simple, and I want to take you through it again. So in a situation that for us to confirm, one thing is for anything. One thing I like about SMC is if you learn it in the right way, you will know why things happen in the market. So, and if you know why things happen in the market, it will improve your confidence. You know why you are scared is when you don't know what market is likely to do. So automatically you will assume the market is coming to this. But at least you can't know what market will do 100%, but you can at least from your back testing, from your experience, you can at least have an idea of what is likely to happen. It doesn't mean that you're going to be correct all the time, but when you've seen it multiple times, sure you get and
Yeah.
incorporate it with your good risk management, then everything at least with time. Because for me, when I started trading, when I bought that strategy is very simple. You just want to go to higher time frame, and let's say he has a level here, and higher time frame drop below this level. All what that I want to see, you want to see a consolidation, then he will draw its counter trend line. Then once market break it, he will put his entry here, put his stop loss here, then he will write it down. Okay, you understand?
Yes.
So, and he can project a very long distance. So
Mm.
he has a he has a trade management too. So if he's entering the trade in this level, if market get to this place, let's say he's risking 3% because he always risks 3% according to him. So if you risk
Okay.
3%, if market get to this level, therefore we close half of that 3% because he doesn't want to
Mm.
leave the money on the table. Then he will move his SL to this level, to this place there. So if the market now drop further, he doesn't have anything to worry about. Okay, you
Mm.
understand? So we'll keep
Yeah.
watching. Then if market now do this, as long as market his SL is here, it doesn't have problem. All they will do again is carry his counter trend line, allow the market to you understand, do his thing.
Yes.
Or
Yes.
sometimes he use Fibonacci, you understand. He
Yes.
use Fibonacci, then probably he use trend line like this, from up like this. So he has his own way of trading, it's very simple, but for a newbie or for someone that hasn't had that experience, and his trading strategy work well in a
Mm.
trending market, most especially when market is dumping, selling. It works very, very fine. But if you stuck in consolidation, if you're not experienced, then that's where you have issue. There you get. So
Yes.
remember, he has taken out half of the money here. So if the same thing happens here, he will put his entry here, put his TP. First TP is always here. It doesn't matter how small it is. So when market gets here again, you will repeat the same trade process. Move his break even here, take 50%
Which
out,
one?
and extend this one. So now that you know that is in this, is also in this. And markets now move maybe 1,000 pips down. At the end of the day, this one is risk free. The first entry, it doesn't have any threat again because it's in break even. The second entry
Yeah.
is also in break even. So maybe within that 1,000 pips, he has three positions like this. You know what that means? It's a lot of money and all go in its own way. So, but why I mention his strategy is because when I started learning it, if I had a trade here and market start pulling back, fear will catch me because I don't know why market is pulling back. I don't know if
Mm.
you get. I don't know why it's pulling back. Maybe you enter with $500 and you've seen about 2,000 something, and
Good.
suddenly you see that the market is now taking all the money. Maybe you are now in plus 600 or plus
Mm.
500. As a newbie, I will be panic, and sometimes I will overextend my break even. Market will take me out, and market will now continue in that direction. I will not have, there are a lot of things that was wrong that time because of the lack of experience. So you understand,
Yes.
which is normal for anybody to go through that level. So, but when I now get SMC, when I started learning SMC, and I understand why those pullback happen. And I also
Mm.
understand that it's healthy for the market. It's healthy for the market. Like it's a normal thing. Market has to be going up, coming down, going up, coming down. But now that I know that, okay, there's what we call inducement, there's what we call engineer liquidity. Those are the liquidity that market will go back to, like this. Let's say market go back here now. Okay, you understand? And maybe
Yeah.
this is an extreme order block. By that time, let's say me I sell something from here, I'll be scared because I don't know why market is coming back to my entry. I don't know if you get it. So I'll
I get.
panic. So all those things is the problem is not the strategy. The problem is me that is trying to use the strategy. I don't have the emotional balance, the
Yeah.
emotional maturity and understanding. I haven't even mastered myself that time. So every move in the market drive me crazy. And
That is.
the concept of this market is its main purpose or the way the new people will interpret it. And part of this purpose is to make you emotional.
Mm.
All the candle you are seeing here is people's emotion. It's not maybe one AI is moving the candle. It's people's thinking, people's decision. That's what
Yes.
the candle is printing. Here you get. If you see market that is selling here, a lot of people agree that they want to sell here and they continue selling. So you understand? If you see people that are market that is consolidating, it means that some people are buying, some people are selling, some people, it's equilibrium, is balancing. So it's like
Yes.
buyer and seller that are fighting. So all those things, when you have the right understanding over the time, over the year, then it won't be a big deal for you. You understand? So now I don't even care about the stop loss. I don't even care about the win. I don't even care about the loss. The pullback, I passed through that level. The pullback done nothing on me. I don't care. So, but that
Mm.
time it's expected to go through that situation. So, in this one now, what we are doing is we'll do. Why I make this is so in a situation like this, for break of structure to be confirmed, as I used to explain in my video,
Yes.
inducements must be taken out. You get?
I understand, sir.
Yes, inducements must be taken out. Whether it's small or it's big, inducements must be taken out.
Hello, sir.
Yes, can you hear me now? I think it's the network break this thing. Can you hear me?
I can hear you. I can hear you. I think that was network then.
Okay, so are we back now?
Yes, I'm listening to you.
Okay, so what about the screen? Is this still showing?
Yes, it's still showing.
So where do you hear me? Where do you stop hearing me?
And you were given a restriction on the icon you're drawing here. Tell me about inducement. So before we confirm a bit of structure, market must take inducement.
Okay, so you can see that I said I saw one of your markup that you did. It's you didn't get the inducements right in that markup, the video you sent to me. So I just know that I'll correct it today. So
Okay.
so look at it. These are it is. Let's say we are selling. This is not about structure mapping. I just want to show you impulse correction. You see this thing that I just put here is this.
Yes, sir.
In a layman's understanding, these are it is.
Okay.
Sure, you understand?
Yes, sir.
So if you want to look for inducements, you see this place. This is where you can find inducement. This leg.
Okay.
These are the leg you will find inducements. Not this one that is coming back. This one is coming back. This impulse, this correction. This impulse, then correction. Correction is what we go and take out inducement. I
Okay.
don't
I
know if
think
you get.
I'm understanding something. Yeah.
Yes. So correction is what we go and take out inducement. So if you now say something like this, and you are now saying this inducement like this, you are wrong. This is not inducement because this thing you are marking is part of the correction leg.
Okay.
For example, look at this. This is this is impulse. You see that's where we find the inducement.
Yes.
This is correction. The same process continues. Impulse, then correction. You get it, Jeff?
I get. I know what happened to me. When I'm looking for inducement of the impulse, sometimes when I did not get it now, and I look at the correction and see that okay, this should be the inducement or something. I'm getting what you're
Mhm.
saying now.
So I saw that mistake, and that's why I'm talking about it now. So impulse like this is where you will find the inducement. If you remember, I said inducement is the last pullback before we have break of structure, or recent pullback before or after we have break of structure. So this is it. Let's say we have markets take out this inducement and this structure is coming down and it's doing this and it's doing this and it's doing this and it's doing this. So in this case now, first of all, you mark your break of structure. This is valid. Break of structure. Now you now look at the recent pullback. I don't know if you get this is the last pullback that the market did before breaking this
Mhm.
structure.
Yes.
But he has also done another recent one after the break of structure.
Okay.
Then he did another recent one after the break of structure. So this is the recent. That's why I use the language before the last pullback before the break of structure. That scenario would be like this. Last pullback before break of structure. Let's say this is how you met the market.
Mm.
This is the last pullback before the break
Before
of
the break.
structure.
So
Okay,
any
you
pullback
understand?
now, okay, any pullback here now would be after break of structure.
Yes, any pullback now will now go for the second statement that I made that after break of
Break of.
structure. So any
Okay.
other pullback will now be recent break of structure, recent pullback that the market have done after break of structure. Remember, this is the immediate one after the break of structure.
Break of structure.
But
Okay.
the market refused to come back for it. It now created another one. So this is the recent, the current recent that the market did last.
Mm.
So it means that when market is here, he hasn't created this, he hasn't created this, then you use this. Then he created this, you shift it to this level. Then he refused to come, you shift it to this level. If markets refuse to come again, you still shift it. Shey you understand? Let's say you
Yes, sir.
still do this, you shift it, say okay, this is where the inducement. You must not buy unless, or you must not sell unless inducement is taken out. You still shift this. So let's say you now shift it like this. You know, a lot of people will be like break of structure, break of structure, break of structure. They will be marking all these small pullback and
Mm.
small break impulse correction. Now, for you to now, first of all, we know that this is our high. You must be protected. Okay,
Yes.
you understand? But you never know your low. Okay, you
Think
understand? So the only time you will know your low is when the market went back and take out this inducement, the first one. So when you now take out this inducement, that's when you will now say this is our low. I don't know if you get.
I understand, sir. Getting you.
Yes. So now that you have this, how will you look for your POI? You start from the top. This first pullback, second pullback, third, fourth, fifth, you see it like that. First of all, you start from the extreme, this level. You will now look at it that, okay, this is the buy, this is the last order block. I expect you to know
Mm.
order block by now.
Yes, I know. I know.
And for order block to happen, there must be fair value gap accompanying the order block. Let's
Yes.
say there is no fair value gap. You now have, let's say there's no immediate fair value gap. You now have fair value gap here. Maybe candle has mitigated this other block. No fair value
Mm.
gap. It means that the other block that is next to that fair value gap is what you will use.
Okay.
The color of the candle doesn't matter. Don't get it confused. Sure, you understand?
Yes, sir.
So to make it easy for you, I will say this. To make it easy for you, instead of you looking for other block, start looking for fair value gap. Let's say you have fair value gap here. In case if the other block, let's say you were able to pick fair value gap here, you were able to pick fair value gap here. Let's say you have this fair value gap. All you need is look at the candle that created that fair value gap like this. You know, there is a fair value gap here. It means there is a candle above it. Look at that candle.
Ye-
That's going to be your other block. Then come to the extreme too. Look at that candle. Okay, we can't use this because this is not immediate. So this is the immediate. So we only have two POIs. I hope you understand that.
Yes, I know.
We only use two POIs. So the first one immediately above the inducement is what we call the lower probability POI. And the last one at the extreme is the high probability. Any other thing inside here, now SMT, is a trap. So in this situation now, you've known that okay, this is just two, this is just two fair value gap that is valid. The other block that is valid. I want you to go and watch a video on how to identify valid other block, so you understand.
Yes,
I
sir.
did it in one of the series on YouTube. Maybe if you watch it, if you still don't get it, probably I'll send you a video that can still explain the same thing for you. Maybe you'll be able to get it better. So you see,
Okay, sir.
so in this case now, a lot of people will say, okay, let's say market did this. And you remember, say, market has failed this level. Let's
Okay.
say market has
This is
failed
our
this level. This is our lower probability POI. Market has failed it. There's tendency that market will come here. But before market come here, sometimes you know that there is an order block here.
mm.
I'm just trying to explain how SMT work. There's an order block
Okay.
here. There is another one here. There's another one here. Sorry. But what we want to reckon with is these two. So that's when you will now see that market will now do something like this. It will mitigate this other block. It will now sell down. But telling down, he only came for this one and use this as an inducement, it will now go up again. He will do the same thing for here. He will come
Mm.
back, use this for inducement. He will now
Yes.
mitigate this extreme. So when you now see that mitigate this extreme, you can consolidate, but the move will be massive.
Yes.
Hey, you understand?
Yes, sir.
So it means that you have your what? You have your high here. You have your so in a simple term, this is what you have: impulse, correction, impulse, correction, impulse. So when we started trading, this is what they used to tell us that we should be
Mm.
looking for. But they don't tell us the drama that happens in between. They don't tell us how to identify that. But remember, it still happen here. Impulse correction. But they don't tell us that this is a trap. I don't know if you
Yes.
get.
I get,
So
sir.
you have to this look like a kindergarten way of knowing the structure. This look
Mm.
like an advanced way of knowing the structure.
Yes. Yes. Yes.
Okay, you understand?
Yes, sir.
So so you see that markets have everybody. Now, people that use this level as a break of structure. Remember, we are market is still selling. People that say break of structure, break of structure, break of structure, break of structure, change of character here. You see that market will also serve them.
Mm.
Okay, you understand?
Yes.
Change of character. Maybe some of them will be sweep out here because they will want to be buying here. The origin that break the structure, they will want to be
Structure.
buying here. They will lose. Okay, you understand?
Yes.
The same thing will happen here. Or some will also be waiting for here, for market to come here. Which this time now, market can now come here and give them
Mm.
profits. Okay, you understand? Remember,
Yes, sir.
market will mitigate the extreme, but this is where the market is going. We now give them profit. But that profit is like they are trading internal structure. That profit will be short-changed. Let's say they are not targeting too much, they are targeting this level, they will make money.
Mm.
But if they are targeting above here and they are unfortunate, they don't take partials and so on, this is where you will see the market go to a level and they will see the market come to their SL. So you see that even if they are using, even if they trade here, they might make money here, make money here, make money here. But at the end of the day, market still serve them. That's why I'm telling you that trading is about perspective. It's not about say one thing. But we understand the major move. These are minor move. All these small ones are minor move. This is the major move. See, in between here is where a lot of people lose money. Most
Mm.
especially if the grammar is much. In between here.
Mm.
In between here. Remember, this one now is just me explaining it to you. In another scenario, markets can be so funny that you'll be frustrated. This inducement, and let's say we have this as break of structure. We've established our first structure. Okay, you understand?
Yes,
Market
sir.
is coming here as an extreme order block, and let's say this level serve as our decisional order block. And market did something, maybe you try and boom. This is what will happen when someone will tell you that the origin that break the structure. Okay, you understand? Do
Yes.
you see that? It's also correct by where you enter the market. Okay, you
Mm.
get
And this
now if
was
we
just
make
taking
money
structure.
here, yes, but this for us now, we know that this is a trap. Inducement is here and POI is here. Okay, you understand? You will
Yes, sir.
make money here, but you are waiting here because you understand the bigger move. Okay,
Mm.
you understand? So
Yes, sir.
that's when you will now see the market will now come back. They want to buy, sell here again, like this. Remember, they are using the same approach. They will say this is the supply zone, the origin that break this structure. Then we mark this level as break of structure. Okay, you understand? Market will
Yes,
now
sir.
give them small direction, will now go up. I don't know if you get.
Understand. Understand.
Market will now go up and then will now drop.
Mm.
You see, the market is serving everybody. That's when consistency matters. If they are consistent with what they are doing, they will be making money, they will be losing money. If you two are consistent with what you are doing, you will be making money, you will be losing money. That's why it's wrong for someone to be looking what other person is doing when your perspective is different.
Yes.
Here
Yes.
you get
Because
what you are seeing is
and because
different from what is seen or what the person is seeing.
that is it, sir. That's true.
So that's why you have to be consistent. It's like you want to say something.
Yeah, because the last time I think I was watching Instagram reel, it was a lady who was analyzing smart money concept, and he
The lady
identified
you
very
said you watch sometimes, right?
not even that one. This is a different one. She analyzed the break of structure where I see market will even take investment, and I don't think she still make money with that. When it comes, you also mitigate other blocks she identify and come back to her take profit. I was wondering that this thing itself is very confusing.
Yes, that's why people jump from strategy to strategy. Because in that strategy that you see that is not profitable, some people are making money from it. The one you see
Mm,
that is profitable, some people are also losing money along the line with making money. You see, that's why I said strategy is just about perspective. So if you are with anybody and someone is telling you that he has best strategy, yes, that person doesn't know what he's saying.
that
There's
is
no
it.
best strategy. There is no almighty strategy. I don't know if you get. There's no strategy that is immune from FL. There's no strategy that cannot give you money.
Mm,
But where most people get it wrong is they were chasing almighty strategy. They were chasing better strategy. If for example, if someone in the industry that is doing fine now, why do you think people will buy that for strategy? Because they believe that that strategy is better than Jeffrey's strategy.
mm,
Some that bought Jeffrey's strategy will believe for Jeffrey to be making this type of money, his strategy is better than Abby. So that's why they will jump from that to Jeffrey and all these people, their strategy works and their strategy fail. The only difference is the people that hold the strategy are more consistent with the strategy than the people that want to just jump into the strategy. I don't know if you get.
I understand.
So it's all about strategy. That's why I said you have to. A lot of people made mistake when they are learning a strategy. They go on YouTube, they go on Instagram, they go on Snapchat. They want to be seeing what other people are doing. You're only
Mm.
distracting yourself. As I'm telling you, you got to a level. I log out all my social media. I didn't have
You told
social
me.
media. I don't want to see what anybody is doing because I've come to the realization that it's just a distraction. They don't know
Mm,
more than you. They don't know better than you. So the first step is for you to get the strategy that you know that it works. Shey you understand? Like this one now, no be say this one no go eat essay. This one too you will chop essay. Shey you
Yes.
understand? But you have to be able to use this one to the level that you believe in it, that even with the SL, you are still going to come out profitable.
That's
That's
true.
where the probability mindsets have to be in place. You have to know that what you are doing is not that you know what the market wants to do. It's not that maybe you understand the market. What you know is the pattern that your system asks you to be following. And once you follow that pattern, your system said it will make you profitable. That's all. Anybody that is saying someone is the best trader, someone is the best this, there's no best trader. They are only experienced trader.
Yes.
You get the check? People
Yes, sir.
just have different. My experience in trading, you can't compare it with some people, and it doesn't matter. Maybe you've been trading for long. You can be trading for long. Your type of experience might be different from my own.
That's
What
true.
you are experiencing now is not what I'm experiencing, but it's what I've experienced. So, and someone that is still learning, that even haven't learned to what you are doing now, his experience will also be different.
That is it.
So, people that argue someone is the best, it's just for talk. It doesn't make any sense. Nobody is the best. You are just experienced based on the way you trade. Sure you get.
Yes, sir.
So that's just it. Let's check the markup and see what the market actually has. So so you can see that systematically market is bullish here. It was
Yeah.
selling here. So let's see what happened. And sometimes you have to understand that you will lose trade, you will miss trade. You should be cool with missing or losing trade.
Mm.
You should be cool with that. Sure you understand? You should be cool.
Yes.
There was a trade, I'll still show you. There was a trade I placed on Friday. Market sweep me out and market go in my direction. And it means
Ah.
nothing to me. Do you understand? And I set another limit order for another setup. Market tap on it, but the spread do not allow me to enter.
Oh, 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 oh.
The tap on my entry, but the spread do not take me in. Do
Okay,
you
that
understand?
that happens because of spread. It happens to me once.
Yes,
I was working. I don't even know what it means.
yes, the spread. Sometimes market will not get to your TP, to your SL, but spread will take you out.
Okay.
Sometimes market will not get to market will be on your TP like this, but spread will not allow you to close.
Oh,
It's normal. It's the gap between the buy and the selling. If you look at when you place a trade, you will see two lines. One is green, one is red. Maybe on your
yes.
MT5. You
Be that
understand?
right. Yes.
Exactly, exactly. So that gap in between, now be the spread.
Okay.
There you get.
Be that.
So let's mark the because you want to say something.
No, no, no. Just answer something.
So you can see that this the last. So let's just look for the obvious break of structure that we have here. So and why is this break of structure valid? Because if you look at it here, this is an inducement. This is a valid inducement like this. Do you understand?
Yes, sir.
Do you agree with that?
Yes, I agree.
Okay. So I'm going to do one of these, whatever I want to do. This is other flow. To watch other flow. Remember I said other flow. Other block is the refinement of other flow. So if you are, this is not a valid other block. So this is other block. But this is other flow. Other flow is the do you know other flow?
The last buy momentum before
Yes, yes. So you see that this is the last buy momentum before the market comes down. This is the other flow. So So now let's say you are waiting for here because you use other block. And why is this other block valid? You can see there is a fair value gap in between. So markets actually mitigate the fair value gap. Market do not promise that I must mitigate your other block.
yes,
Fair value gap is a POI. Other flow is a POI, point of interest that market can return.
yes,
Refined purpose is just other block. So if market do not mitigate your other block, it's not that maybe you do anything wrong. So you
yeah,
understand?
yes,
So sometimes if the fair value gap is not big, like this now, like this, if the fair value gap is not big, sometimes I put my entry here, half of the fair value gap. So you
oh,
understand? In case
yes,
market want to use the fair value gap and drop. So so that's for that. So it means that this is our high now.
yes,
Then this is our low. This is our break of structure. Sorry. Let me let me pause it. Let me just mark it like this. Okay. So after this, we know that this is our high that must be protected. Then where is our recent pullback that we had here? So if you want to start from up, but let me pick it, and if you agree with me, you let me know. If you are not agree, let me know. So this will be our recent pullback, the last pullback. I don't want to be confusing you by saying major and the minor pullback, a minor. I don't want to be using major and minor IDM. So just go with one. So so this will be our because if we are to look at it, this is supposed to be our major pullback. This level. Why? If you look at this, let's say this happened like this, pullback. Here you understand. You can see
yes,
this is so market now come down, pullback, then come down. So if you look at this other flow like this movement, if you look at this movement, you will see that this is the last pullback, last move that this market did before we collapse. So,
Mm.
but it makes no difference. Yeah, you understand?
Okay.
So because if market take out this inducement and drop, it's still the same thing. Because
Okay.
there's no other block, there's nothing. So you can use there. Yeah, you understand? So first of all, immediately market take out this low, we know that this level, we know that our low is confirmed. This
Confirmed.
level. Yeah, you understand? So if we are to mark our POI, let's look at it. We are marking our POIs from this leg. Okay, you get.
Yes, sir.
Okay, so we can start from up. First of all, for easy way to get it, I say you should find fair value gap in between. Because if you understand that this move, you can start from this up and see that everything mitigated. This is not everything mitigated. So as I'm seeing here, there is no POI here, no POI. Everything mitigated. You can see this one has been mitigated. This one, and it has no value imbalance. So no imbalance, nothing here. If you see something like this, the market do not give you opportunity or it did not create any POI for you. Two things will happen. Is either market change character or market create POI or market sweep inducement and drop. Okay, you
Okay.
understand? That's
Okay, sir.
what is likely to happen based on the time frame that you are working with. Okay,
Mm.
you get. So
Yes, sir.
you might go to another time frame and see POI. Okay, you understand?
So
But
what would you do at that particular period of time?
you mean myself?
No, when you go to other time frame and you see PY, so will you reckon with it since the market
No,
is
no. Reason being that if I'm using two POI and two time frame, okay, you understand? This is the daily time frame now. Okay, you get. My
okay?
entry time frame will be 1 hour. Do you get?
Oh,
In this
yes, sir.
case now, the only thing I will do, or I will based on my experience, now that I know that there is no POI here. There's no POI, sorry. Now that I know that there is no POI here and structure is intact and there is inducement. POI means there's no point of interest that I can sell from. So all I need to do is because I said it's either market sweep this inducement in daily time frame and collapse, or market creates another inducement and allow you to have POI. Because let's say this market creates after market come down, it now creates something, now drop. This level now will be our POI because it has fair value gap. Remember,
Okay.
this buying candle will not be there. So maybe you now work with this. Okay, you understand? But if that doesn't happen, then you allow the market to just do its thing. So the only thing you can do is to go to maybe 1 hour. Okay, you understand?
Yes, sir.
One each. No. The only thing you can do, but I would not advise you to do that. So let's say you go to one each now. I don't know if this can go as far as where we want to be. No, it's not showing. You can't go there. So it still doesn't make any difference, sha, but you just wait. Then let's say this is your entry time frame and you find yourself, let's say this is your 1 hour, and you find yourself in this situation. What you do is still the same thing. Wait, you let market decide whether you want to create another structure or you want to give you a POI or you want to change character.
Okay.
Okay, you get. So
Yes,
so
sir.
now that we have something like this, then if you have to be consistency also go with your time frame. You can't be jumping from 1 hour, jump to 4 hours today, jump to 3 hours tomorrow. Okay, you understand? That will
Yeah.
distract you. Because when we are marketing this structure, is specific and unique to this time to any time frame we are marking it.
Mm.
Do you get? It's
Yes, sir.
specific and unique to that time frame. If you go to another time frame, another thing is what you would be likely to be seeing. Do you get?
I get. I get.
If you're marking your structure in 1 hour now and it's giving you a complete structure, if you go to 15 minutes, it might be giving you change of character in 15 minutes.
Yeah. Yes, it
If you go
happens.
to 4 hours, that place that you said your extremist, it might be say that's where the 4 hours inducement will be. You see that you're only confusing yourself. So you'll
Yes. Yes.
be worried. Here you get.
Yes.
So I'll give you an idea on how you can navigate that. Here you get. If you mark a structure in 1 hour, look at the like this one now. Let's say this is our 4 hours, and I check it. I see that. Okay, let me give you an instance. Let's say this is our 4 hour structure. Maybe market drop now went back, still now drop. So you can see that these 4 hours we have break of structure here. Market come to extreme, then drop, break this structure again, break of structure, break of structure, break of structure, inducement here. You see that first break of structure, market actually print it in 4 hours. Second break of structure, market print it in 4 hours. Third break of structure, market respect 4 hour structure. Is a clear sign that the structure that the market is respecting currently now is 4 hours. So don't go to 2 hours or 1 hour and be looking for sell. Stay in that 4 hours. Shey you understand? But
Yeah.
if you see say market, let's say this is 4 hours and market get to this level, it doesn't take out PY and it drop. It take out this and it drop. It do not take out inducement. And
Okay.
in 4 hours, you see that market do this again and drop. Let's say you want the inducement here, you want to sell here, you are missing trade. Shey you understand? You want the market to come here, but when you now go to 1 hour, you now see that the coming back, this missed trade that you are having here is actually correlating with 1 hour structure. Maybe there is 1 hour POI here, maybe there is a small inducement in between and the respected. So you look at the current time frame that the market is responding to,
Okay.
then you cannot follow that time frame because sometimes you'll be missing trade on 1 hour. In fact, you'll be talking SL on 1 hour, and market will be delivering for people that are using 4 hours. You will be losing money on 15 minutes, and market will be serving people that are using 1 hour. Or you will be missing trade in 4 hours. You will set your structure, you set your POI, market will not get there. First time, second time, you are missing trade in 4 hours. It means that market is serving the people in 1 hour. So it's not that maybe you are wrong, but market, if you remember, market serve everybody. It's not
Yes.
limited to any specific time frame. But where consistency comes in is that when market is serving other people, you is likely to be missing trade or you are likely to be losing trade. But if you are not consistent with your own time frame, when we say because you don't lose two trade, you run go another time frame. If you be saying that when you run go another time frame, if you be saying at that time, market will come the fuck with that time frame up again. I don't know if you get it.
I
So
get
this
that.
is all about the consistency. If you miss trade in 4 hours, if 4 hours is your time frame, stay with it. Just that's why I said you have a trading plan. Part of your trading plan is your time frame that you are using. If market is even if you are eating XL on your time frame, it means that no be your turn. Just stay with it. Market will
Yeah.
come back and serve you. Last this year, middle of this year, I was trading GDP and USD JPY. Me and one of my bros like that. And the trade was just crazy because we were using 1 hour and the market was just messing us up. Before that time, market has been delivering with 1 hour, but it just the same setup, just the fail anyhow. And I went to 4 hours. I go tell that bro, say, bro, calm down though. All those times when we say we are trying to buy in 1 hour, market has changed the time frame with 4 hours that it's clear now that the market is falling. And you will see it will be obvious. Do you understand?
Yes, sir.
So all I do is to just mark the 4 hours, but because I'm using daily time frame as my higher time frame, then let's say daily time frame is buying. Market will not just buy. If you go to 1 hour, market is likely to respect the lower time, maybe 4 hours, 15 minutes towards that daily time frame direction. We can't be buying daily time frame. So as long as 4 hours align with where the daily said we should go, and you discover that that's what the market is actually responding to, then you can trade using that time frame. But I don't want you to be jumping. So have a fixed time frame. You have to learn even when losing is part of your learning.
Okay.
That's why when you said if you lose 2, 3 trades that you will stop trading. Why do you want to stop? It's because you are judging yourself based on the outcome. You believe that because you lose 2, 3 trades back to back, you are wrong or your setup is not working. Reason being that you were focused on the outcome. You are using the outcome, the win and the losing trade. That's what you are using to judge yourself. Instead of if you lose 3 trades back to back, the only thing you need to do is to go back to those trades and ask yourself, do I follow my plan?
Okay.
If your answer is yes, is a win trade for you, you are winning. That winning is compounding. You are reinforcing yourself, your brain, that even if I eat TP or eat SL, it doesn't define me. It doesn't mean that I'm doing anything wrong. Do you understand? But the one that will eat you hard is the one that will eat you hard, that will set you back, is the one that when you now ask yourself, do I follow my plan? You now see that you don't follow your plan. When you don't follow your plan, you are also reinforcing your brain, your mind, that it's normal for me not to follow my plan. And remember, trading, all these things is an habit. If you can't incorporate good trading habits, you can never be successful. Forget it. Because what the professional does that make them to be profitable is the habit. They understand that when they lose trade, they are not going to revenge trading. It's the habit. They've trained their brain not to revenge. They've trained their brain to always follow their rules. They've trained their brain that if they are risking 1%, no matter how sweet and juicy the setup is, they are not risking more than 1%. But typical trader that has bad habits, because moving average and the trend line jam and the support and resistance jam, you say, this trade is sure die. Now that time it go risk like 50% of this account. And he forgot that there's nothing sure in trading.
Yes.
It's a probability. If you understand what probability means, you will know that Even if it's 90-10 probability, that 10 can still play out.
That is it.
If you have 90%, say, okay, if you used to watch ball, you will see a match that Baka will be playing one small team, and you will believe that Baka must win this match. And that match, Naim Baka will lose, or they will draw. You get so no matter how big or small it is, it's still a probability. There is nothing certain. If you hear anyone that say, I sure die, that person is a baby, he doesn't know what he's saying. Professional traders don't show. They don't what they know is no matter how sweet this thing is, no matter how reasonable it look, is it my trading loose? Does it fit into my trading plan? Yes. Then they will now say, how much am I supposed to risk? Maybe 1% based on their risk tolerance, maybe 2 or 3. And they are fine. Because they know that they can't be, it's not one trade that will make them successful. It's a series of trades. So they are not being, now new people win one trade, then they jump up and down. They will be showing screenshots. They will be say, I don't know if you get. It's newbie because he believes that it's that one trade that he has hacked the whole thing. It's a lie. Market will humble you. The following day you will blow that account.
It happens.
Do you understand? So
Yes,
it's
sir.
all about the mindset. It's all about the way you think, and those are the difference. When a professional trader win trade or when they make a lot of money in the trade, they still remain calm. When they make 100,000 of that, they remain calm. When they lose 100,000, they remain calm. They know because they understand that it's not about one or two trades. Let me give you an illustration because this thing I'm saying is more even important than the chart. But we'll still do the chart. Sure, you
Yes, sir.
understand? Let's say if you toast a coin and the coin, they say you should toast the coin head or tail, and they tell you that this coin, we don't add small weight, we don't modify in a way where they say if you throw an up 10 times, you sure say 8 times or 7 times, or let's say 6 times, head will show. No matter how you throw it, they've done it in a way that head will show. Sure, you understand? In 6 times. So they
Yes.
now give you that coin to toast. And you choose that, okay, I choose head. You choose head, I choose tail. Sure, you understand? And we bet. And you know that the coin you are toasting, no way. Most of the time, majority of the time you will toast it, head will show 60% of the time. If you toast
Yes.
that coin first time, you show me tail. You know, say that mean win. Are you going
No.
to be panic?
No.
If you do it second time, you show tail. You know, say that mean win. Are you going to be scared?
No.
If you do it the third time, you show tail. Are you going to be scared?
Not really. Because I understand what is going to the outcome. What
So
will
if you
come
now
after.
do the fourth time, you now show head, you will just smile.
Uh,
If you say the last 6 months that you will do, now head go show and you will win.
yes. Yes.
That's what happens when people are trading. They don't understand the probability of the game. So that's why first loss, second loss, third loss, they drive them crazy. They will now go against their rules. They will be jumping guns. They will think they are doing something wrong. They will panic. Some will even change strategy. Do you
Mm.
understand? So because they don't understand the probability. So let's say you now have a strategy. That this strategy, you know that if I follow this strategy 10 times, no way, I will win 50%. And if you win 50% and you are targeting 1 to 3, if you multiply 50% by 1 to 3, it means you are in 15%.
Yes.
Because for every win, you are winning times 3. You get?
Yes, sir.
So that means it's 15%. If you now remove that, you win 5, you lose 5. When you win times 3. All the 5 you win, it gives you 15%. If you now remove all the 5 you've lost, that give you 1%, 1%, 1% loss, that will be minus 5. If you now remove 5 minus 15, you'll be profitable 10% up. So if you
Yes.
know that, if you play first trade, you hit SA, you play second one, you hit SA, you play third one, you hit SA, will you still be panic?
No.
So now, let's say you now go according to what you said. Set up on show the fourth time because you don't say if I lose 3 times, I'm not taking this trade again. That fourth time that you did not take, it can't be win. The fifth time that you did not take, it can't be win. The
Again.
sixth time that you now want to take, you still can't lose.
Uh,
So, so it means that you are not allowing your strategy to play out. So your job is not to think about whether you win or you do. Your job is to consistently make sure, say, this thing that I said that we do is what I'm doing. Leave the mathematics for the market. Market will figure it out. See, you understand? Market will figure
yes.
it out. I've been I had a one account that time with that. I mean, minus 8%, it remains 2% to blow that account.
Mm.
But still they take my trade. I still take my trade. But at the end of the day, that can still come back to break even because the last 2 trades I took just give me win. That's plus 6%. The next one give me win 9% straight. I come back to break even with just 3 trades. Don't
That's
come up.
crazy.
See, you understand?
Yes, sir.
So those are the things that you just need to understand so that when you are experiencing all these things, you will not be. So now we have change of character here, and you see, market give us this push up. push down, then so you can see. So why is this like this? Is because markets come above this level. This is not a break of structure. We just want to use it to know where the last pullback is. Okay, you
Okay.
understand? So so you mark your inducement here. There you get. So now that the market came below this inducement, your high is confirmed.
Mm.
There you get. Your high is confirmed, and your low is here because this is the last low that we have when market change character. Okay, you understand? So if you want to mark your POI, this is not no value. So if you have to go by what I said, look for where fair value gap is first. You see, immediate fair value gap. Okay, you get. Then this is
Yes.
another one. This is another one. Okay, you get. So if you have to go by the other flow, this is complete order flow. The last sell momentum. Okay, you
Okay.
understand? So you see that that's what the market responded. But if you now want to go by the other block, as I explained to you, let me remove this other flow. So this is the other block, this block. Because remember, this is the last selling candle. But this
Mm.
one do not have fair value gap. So what are we going to do? We move to the one that has fair value gap. Okay, you understand? So if you're using other block, this what will be our extreme. This is where we'll be expecting this market to do what? To return. So, but you can see that market actually did what? Market respects the other flow instead. This
Yes.
other flow. Okay, you understand? So,
Yes, sir.
and you see that it's this fair value gap that the market respected at. Boom. So if you're waiting here to buy, then you might miss the trade. But you know you can't buy in daily time frame now. So what you do when market gets to this level is that you go to lower time frame, and now be looking for change of character. When market give you change of character, then you start buying to this level. Do you get the idea?
Okay, get it, sir. That's where sometimes I had problems. But I knew that the direction of the market is either bullish or bearish. So going to lower.
And say this, for example, now let's say this is our valid POI. You will immediately market at this level. You will now go to 1 hour. You will now be looking for change of character because in 1 hour, all this move will come with a structure. It will come
Mm.
with a structure. This move now it will come with a structure. So the complete structure. So you just look for change of character that is over that you when you identify your change of character, then maybe in this place now that's where you can see a trade. This pullback now. So that's it's just that because you can't take a trade from daily.
Yes.
Daily now tell you that we are now moving from this with this impulse in daily, this impulse, this correction, then we are continuing. So in from this level now, from this level to this level, all you want to be doing in 1 hour is buy. And you see it's about 1,000 something pips. 1,000
Okay.
pips. So all you need is to be buying. In between, market can give you sell signal. Okay, you understand? Market
Mm.
can give you sell signal, but you know that is against the daily time frame. So you are not going to be selling. You wait until that structure change to buy again before you continue the buy. Okay, you understand? So
Yes,
let's
sir.
say you are using 4 hours for your higher time frame, and market come to your 4 hours POI. You go to your 15 minutes and start buying in the direction of 4 hours. That's
Mm.
what you continue doing. So we have this confirmed, break of structure confirmed, break of structure confirmed. So look at what I said. It means that this low has been shifted to this level. So
Yes.
immediately market break this structure. Look at it. We have so if you have to mark when market break this structure, this is our last pullback that the market did. Okay, you understand? So
Yes.
essentially you have to be detailed. So but look at it. After this pullback, market did something like this. If you know how to identify valid pullback, I've explained. Sometimes it will be small. So it means that you can see that market did what? Market take out this pullback. Your your make you know that this one is obvious, but this one is small. If I on
Mm.
the you see, this is the line chart. You see that it's here.
Mm.
There's a pullback here. So you
Okay.
see, so but you know that line chart only use body, it doesn't use the week, and we are dealing with week. So if you want to look at it clearly, you will see that we had a push from here, then market come back, then market go up before it now come down. So it means that after market take out this inducement, we'll be looking for fair value gap, which is this level. Immediate fair value gap below the inducement. This is this level, and this is the fair value gap between it. This is the fair value gap between it. But you see that market do not mitigate the fair value gap and market move. Okay, you
Mm.
understand? So
Yes.
now we have break of structure here. Market will still reset itself. So we have break of structure here. Break of structure. No. Yes, we have break of structure here. But because there is no inducement, if you look at it, when this market is going up, we do not have any inducement. Okay, you get. So
Yes, sir.
market now come back and continue. So that's what makes this break of structure valid.
Okay.
Because market created another inducement for us. So after this break of structure now, you will see that market will still reset itself. After this break of structure now, Because if you don't look, remember this is daily. The chart will be
Mm,
clearer in lower time frame and so on. So where is our low? That's what is important to us. This is our low.
mm,
So so you see, what does market do again? Market push up, push down, push up again. So where is our inducement here? First of all, here is our inducement. But what does market do again? If instead of coming to come and take this inducement, it created another move again. Sure, you understand? So
yes.
means that this inducement, this is the major inducement. This is where the major liquidity is resting, but this is our inducement here because this is the last pullback that I did before the markets come above this level. Remember, this is not break of structure. Sure, you understand? So
Yes.
so now, what are we going to look out for? I don't need to mark this here so that I won't be confused. So what are we going to look out for? It means that immediately market come below here, we mark our high.
Mm,
Why is this not responding? We mark our high. Sure, you understand? And this our remain low, remain the same. There you get. So
mm,
now, where is our POI? We have a POI here, decisional POI, and we have extreme POI here. Why can't you don't wonder why does market come back there? Do you understand how I got this? Are you
yes.
clear?
Yes, I think I'm clear.
I think the network is okay. I think we are back.
Mm,
Okay. So look at it clearly so that if you have any concern. Sometimes me too, my lose guard, so you'll be able to correct me. Yes, now I
okay.
might not see everything. So these are our inducements, this is our POI. Why do we have this POI? Because it has fair value gap and is the fair value gap next to. Then why do we use this as an extreme? Because it also has fair value gap.
Okay.
Okay, you understand?
Yes,
It has fair value gap. And there is no other block below again
that is valid.
that is valid. There's no other block. Do you see it? So now that we know that this is a lower probability, we are reckoning with this one.
Mm,
Okay, you understand? And as I said, remember I said this low is where the major liquidity is resting. Okay, you understand? So market came back for it. So when you get here, you just go to 1 hour and do what? And start looking for buy from here to this level. So it means that we have break of structure here. Look at something here. Someone will mark this as break of structure.
because of that.
They will mark this as break of structure. They will mark this as break of structure. And they will want to be buying here.
Mm,
The market will do what? We will play with them and fuck them up. Whereas this is the major POI that they should be looking at.
yes.
Okay, you understand? So
Yes, sir.
so look at this again. When market come here, first attempt market sweep this level, but pull back, and second attempt, that's why I mark this as break of structure. So
Mm,
immediately market come above here, this break of structure is confirmed. This one
yeah.
is confirmed because the candle second attempt has closed. So where is our inducement? Our inducement is here. So you understand? And what do
Yes.
you see? Market come back for it. Then if you have to mark our POIs, you can see that if you look below, you will see that this is the only POIs with fair value gap.
Yes.
So you understand?
So
All these
I
have
think
been mitigated.
at this time we have to shift our trading low, right?
You said
I think at this point in time we have to shift our trading low. Yes, that's what I'm
this
saying.
is our low here. Yes.
Yes.
So our low is here. So if you look at this selling can no fair value gap, no fair value gap. So the candle that created fair value gap for us. That's where now a lot of people will be waiting here for a stream,
Mm,
but they don't understand why. They just say this is extreme. But you see, systematically, market did what? Market just come back to this level, mitigate it, and do what? Boom, and
come
push
up
it.
again.
Sure, you understand. So you should
Yes,
ask
sir.
yourself, why does market always come back there? Give me a minute.
All right.
Okay, so don't you ask yourself why is the market coming back there? Why is it like that? Are you with me?
Yes, I'm with you.
So it doesn't mean that this is how market move 100%. But if this is the only one we concentrate on, it's enough to be profitable.
Yes.
Sure you get. So
Yes, sir.
so that's just it. So look at this. It means our low is here.
Yes.
And what are we going to look out for? First of all, inducement. So where is our inducement here? Market push up, push back, push back, push up, tiny pull back, then boom. So it means that we have our inducement here. You can look at it If it's clear enough, you're able to.
This is clear. I'm able to see it
Okay.
clearly. It's clear.
So now see what I said. You can see that no fair value gap, no fair value gap, no fair value gap. So no POI. Remember, we've talked about this thing today. No POI. So when you see something like this, no POI to buy from, is a sign for change of character. It's a sign for change of character, or market will create another structure for you. Maybe market will sweep this one like this, sweep here, the market will go. So it means that we break the structure here, then this low will now go. Sure, you understand? Those are the
Okay.
other scenarios that can play out. There you get.
Yes.
But if you look at it now, what does market do? Market just come here because it knows that some people will mark this as an extreme. They will definitely want to buy, give them small direction and fail. But you now, immediately market do this now with this experience. Immediately market come down, sweep this low, do this, do this. Market use this one as an inducement for sell and drop. So once this inducement has been failed, you can start. Someone can start selling to the downside because you know that there's tendency that is going to fail. So you understand? But I don't want you to be doing that. I'm just showing you with time and experience. You will know. You'll be able to. You will know how to go about it with
Yes.
confidence. So what you need to do is to just lock up for this setup and allow the market to do its thing. So you understand? So in lower time frame, after this one fail, maybe you can sell to this level. But in order, because it will be a kind of trade that you will be panicking that anything can happen. Because one, you are not following your plan. So it's better to leave it. So and you can see we had a change of character here. Change of character doesn't mean the market will start is now the market will continuously going down. No, market can change character and still change character to the upside. Doesn't matter. So after this change of character, what do we see? We have to mark our inducements. So after this change of character, this is the last pullback that the market did. If you want to know, let me show you. This is what the market did. With all this drama here, this is the last. No, then now come back above this candle and now drop. If you watch how to identify value pullback, this one will not even be an issue for you. So you
No, I
understand?
understand. Was that great candle is turned out
Yes, come above. Yes, exactly. Okay, yes, you should. So this will serve as our inducement. And now what are we looking for? First of all, let's look for fair value gap. First of all, we can see one here. We can see one here. Some people will say this is fair value gap and it has been mitigated. No, it's only partially mitigated. All these are fair value gap.
Okay.
You understand? Because the gap between three candles are fair value gap. And you can see. So this one attempts to go and cover the gap, but he was unable to do that. So this fair value gap, then we can use this PY as our decisional, low probability POI, then we can use this as our extreme
Explain.
because this also has fair value gap.
Okay. Okay.
Yes. Okay, my network is breaking.
Okay.
Okay. So then this will now be high. This will be high. So anything that flows above here is what? Is what we call change of character. You understand? So
Yes.
and you can see when market got to this POI, market failed this POI. How do I know that the market failed it? Market closed above this POI, this other block. When market closed above this other block, what do I say? I said there is tendency that will come here. Once this one fail, there is tendency that will come here. So you understand?
Yes,
So
sir.
in a nutshell, once it fail, if you want to counter trade it, look at this. If someone wants to counter, I'm not advising you to counter trade it. Because you will be confused. So you can see that this will serve as our small inducement, or this is our major inducement. And you can see the market will find one of the fair value gap group and go and mitigate it and use it as buying POI, maybe somewhere here. Okay, this one not really escape. So you see? So there you see that. So this one attracts this, and if you have to use the other block, we'll use this whole other block. There you get. But in this case now we are not selling, we are not buying because we are expecting the market to come to extreme and sell. So just leave it out. You see, when market got here, market reacts. No way, market reacted. And at the end of the day, market changed character. So, so change of character. This confirmed change of character. First attempt is sweep. So this close above this line, confirmed change of character. Okay, you understand? So by that, our low remain here. I know a lot of people will mark this week as change of character and they will put their low here. So that's not the model we are following. Okay,
Yes. Yes, sir.
so just keep your low where it is. Then now, after that, where is our inducement? If you look at it, after market take out this high, it's not break of structure. So this is our last pullback, last value pullback that the market did. One thing is, even if you are confused with all these things, market will still reset itself to a level that you will understand. Remember, this is not value pullback because market just. Do you understand that this is not value pullback?
Let me see.
This
How
is a
to
value pullback. Hold on. But because it do not close out, it did not come above here, either by week or by
But
body.
okay,
That's why
okay,
this low is not valid. There you
okay.
get.
Yes.
So you see, when this one push up and come down, it close above here.
Mm,
Impulse, correction, impulse. So that's it. So you don't mark this as inducement. You mark this one as inducement. And after we add the inducement, where is the fair value gap? Immediately fair value gap that we have this one. So it means that if you are to mark it, that means we are using this other block that created that fair value gap. You can use this other block and ask yourself, why do market return from this arm? So from what we are marking now, you can see that if you mark it correctly and you stick to your rules, there is no way that you will not be profitable.
that's true.
You see how many, you see how simple it is, and you see how market is respecting it. The one we no respect, we chop SL. But you can see that he has been respecting us. It means
Definitely.
that this is how markets move most of the time. So it's not about the strategy anymore. If you are after you've mastered this, it's about you yourself to be able now to follow what you said you will do. So if the market will come here now. Now this is the decisional POI. Where is our extreme? This is our extreme. I don't know if you have a fair value gap there. Let me check it. This
I think
candle.
it has very good.
I
Think
think
so.
it has been mitigated. Let me expand it. Yes, it has been mitigated. Sure you
Okay.
understand.
Yeah.
Touches that. So it means that this is not going to be our extreme again. So let's see if we have another one. The only place after this, the only place we can have is also this level. Because there is I'm saying no, there is no fair value gap here. This is the other flow. Sorry. Because why they say if you are looking for here, this one, this this has already mitigates this one. So this one is not working. So let's check the other load that the market created. So
Okay.
if we are to use this is not valid because this is the candle, this same candle. Every other candle is inside this one candle. So this is the
Mm,
major candle. And you can see that it has been mitigated. Sure you
yes.
understand.
Yes,
So
sir.
so if you now said we want to shift it to this one, then you can see that this one too. Okay, market mitigates the fair value gap there. Sure you understand. So but if we
Yes.
are splitting it to only other block, then maybe we will now say okay, market can come here. Sure you understand. So this
Yes,
will
sir.
now serve as our extreme. Sure you get.
Yes, sir.
Because this one now will serve as a liquidity stop loss go dey here. So this low. So anything that make market come here, we go to 1 hour and we start looking for buy because we know that every other thing below here has no POI again. So if this one fail, if this one now fail like this, let's say market fail this one. Next thing that is likely to happen is for market to come and sweep this low. Once market sweep this low, we have external liquidity sweep, then we can prepare to buy again to the upside.
Okay.
Yeah, you understand?
Yes,
So
sir.
if your extreme POI fail and market sweep your low, then that's external liquidity sweep. It's also a sign for buying continuation. Yeah, you understand?
Okay.
So let's continue
Yes,
marking the structure. So it means that this is our low. Now, this is our low. I know they trade this pair, but you can see that it's still everything is still aligned here. So this is
yes.
our low. Okay, we are not using this again. So this is the current situation here now. So after we have break of structure here, what do we have here? We look for our inducement here. Last pullback. Do you know how I got this?
Let me know. Post correction. Post
You can check
correction.
it.
Post correction.
Any objection?
So what's the question again? How you got this inducement?
Okay. So break of structure here. This is the first low that the market created, right?
Okay.
Then market went up, supposed to come and take it. He created another low here. Is that correct?
Yes.
Market went up, past sweep this high, supposed to come and take this low. He created another low here.
Mhm.
It's because this is the highest move and the market come below it. Here you get.
Okay. Yes, sir.
So this one also supposed to come and take this one, but after it close, after it passed this level, you can see that it passed this level. So it makes this low to be valid. And instead of it to go up and come and take this low, it still created another low here.
Okay.
Now go up. Sure you understand.
Yes, sir.
So this is the last low that the market created. And if you still want to check, you can check. You can see that the market used the bump. It means that there is a low here. The market used
Mm.
the body. So you have to just train your eyes to be able to see it, pay attention to it. And you can see first attempt market creates equal low, not even equal low. If the market do not take it. So look at
Mm.
this. These are drama. All this drama is just for the market to come and take in this one. All this drama. This is where a lot of people when market took out this inducement, market reacted. Okay, you
Yeah.
understand?
Yes,
So
sir.
because we don't trade inducement sweep. Some people they trade this inducement sweep. We don't trade it because it's also low probability. So after we mark our POI, what are we supposed to do? We come to this down and come and look for the other block with fair value gap. So we are able to find one here, this one. But if we want to refine it, we refine it to this small other block like this. So you understand? So this is it. So but other flow, this is other flow.
Mm.
So you understand? The
Yeah.
the smaller order flow is this one. So you understand?
Yes, sir.
Because if you look at it, this when markets come down, market push up, this is the last sell momentum before we have this big move.
Yes.
So you understand? So that's why for refine purpose, because it's a daily time frame. So anything here can still be valid. Anything here,
Mm.
this level can still be valid. So this one now toast they toast people. Market fee respect the fair value gap in between. If you look at it, there's also upper fair value gap here. But this is not the
Mm.
fair value gap that created this other block. It was this tiny. Let me see if it's even valid. Yes, it's valid. You see how tiny it is. We are still
Yes.
not going to overlook it. The gap between the gap between here, this candle and this candle. You see, this is the first candle, this is the second candle, this is the third candle. Okay, you understand? So this gap is what we are calling order flow. Okay, you understand? So if you look at it like this, market is already attempting to get there.
Yes. It's very small.
So this is the this is the structure. So and your low is here. And what do we do here? When market comes below here, we have change of character. And this is our high. This is our high. That's all. So in this case now, if you go to 1 hour, you know the market is still preparing to mitigate this other block. If you go to 1 hour now, just look at the last structure that the market created. Don't stress yourself. Look at the low that the market created.
Sorry, sir. Excuse me.
He said,
Excuse me, sir. Sorry. Can I
"Are
ask
we?"
you something?
Yeah, I'm with you.
Okay. In this scenario now, that means if I analyze the daily time frame
Mm-hmm,
and I understand what market is doing, maybe the general bias of the market, then I should
mm-hmm.
move straight forward to my entry time frame and finalize everything I have to do there. Why I ask you is because before, if I'm going to use either one hour or 15 minute time frame and analyze daily time frame, I'll also check on 4 hours. I'll check on 2 hours.
No, no,
So
no,
on
no.
Friday,
That will confuse you. Yes, I get, but don't do that. It's
okay,
like you are just doing multiple analysis. That will
mm,
confuse you. If you analyze on daily, nothing concern you about 4 hours. Just go
okay,
straight to 1 hour. If you analyze on 4 hours, nothing concern you with 1 hour. Just go to 15 minutes. You see,
okay,
the only reason you are going to lower time frame, you say, it will give you an entry, precise entry with lower stop loss. Okay, you
mm,
understand? You can't
yeah,
take trade. It's not reasonable. It's only position trader or all these investors that take trade in higher time frame like daily because
yeah,
they are not like us that is using stop loss and so on. So if market come down again, they can still add money. If you come down, they can still add money. Okay, you understand? So,
mm,
but for you now is to be able to have inside this level now instead of you to buy here like this. Okay, you understand? 77 pips is your headset. But what about if this is how big your POI is? Are you now going to be looking for, let's say this is how big your POI is?
mm.
You can't use 324 pips for SL. You can use it, but at the level you are trading, it's not
Yeah,
reasonable. So you want
yeah,
the market to come and act drama. Maybe market should do something like this. Market should do something like this. Then now change character. Once you see this change of character, you know that even if you take your entry here, put your stop loss here. It's even too much. Maybe your extreme order block is here. Okay, you understand? You can put your stop loss
mm,
here. At least this is still reasonable. Okay, you understand?
yeah,
And you know
yeah,
where you are targeting. Let's say you are only targeting here. Then even say 1 to 5. Okay, you understand? You know that you want it. Okay, you understand? So
yeah,
we compare to this one. So it's just to refine, to be able to refine your entry. That's just what it's for. Okay, you understand? Then the higher time frame will be the one that will give you the overall directional balance that the market is likely to go.
okay,
Okay, you understand? So in this case now, you know that I've marked the low, I've marked the high. Okay, you understand? So if you are still selling, this is your extreme because this is your decisional POI. Then this is your inducement. Okay, you get. Then probably maybe you can use this as decisional POI. Okay, you get. So because market has not tapped this level, so you can still risk to sell down maybe at any of these POI, but I would prefer to wait for this imbalance here. Put my stop loss here. So least 1 to 3. Sure, you understand.
Mm.
So, but if you now have a situation whereby let me expand it so that you see it. If you now have a situation whereby this trade fail like this, let's say market come here, react like this. If you're lucky, maybe you hit your TP. But in this case, when market give you 1 to 2 like this, it's advisable to move to break even. So let's say this doesn't happen, maybe this happens. So now you have a change of character. Sure, you understand.
Yeah.
What I used to do is, the market has changed character in daily in 1 hour time frame. Sure, you
Yeah.
understand.
Yes.
Yes. So, and market, I will now come to daily and see if the daily has mitigated any POI, no POI, no fair value gap, because sometimes markets respond to fair value gap, not necessarily the other block. I remember that
Mm.
we in our other block we dey look for. Sure, you
Yeah.
understand. And if you
Yes,
look
sir.
at what market did here now, daily time frame, market sweep this level. Sure, you understand. Market swept
Yeah.
this level. So, and it's inside our POI, this other flow. Sure, you understand. So,
Yes, sir.
remember, this is your high. So I will prefer to go to be in 1 hour and ignore this trade like this. I want this trade. I will ignore it for a while. Why? Because I want the market to tell me by creating another structure for me. Maybe market now come down here. Sure, you understand. Take out inducement, maybe come here because this will serve as our new low and do what? And now create another structure. If I see another structure, then I can now attempt to start buying in that direction. Inducement, if market come back here, I can buy. Okay, you understand? Because from the experience, if you want to start buying here, if you want to start buying immediately after you see change of character, market can easily do something like this. Because remember, we have POI below. Market can easily do something like this. Are you with me? I can't hear you. Unmute yourself. Okay, hold on. Let me allow you to speak. Okay, are you back? Should be able to speak now.
Yes, yes.
Okay. So what happened? You disappeared.
The network.
Okay, so do you get my explanation?
Yes, sir.
Where do you stop hearing me? What's the last
You
thing you
said
hear me?
you said you will ignore this trade for now.
Okay, so I said I will ignore it because in a scenario that you have change of character here, markets can still do something like this. You remember this is your inducement, maybe you mitigate your decisional POI, and you have your extreme here. Markets can easily come and now sweep this low. You sweep this low. Okay, you understand? And now mitigate this
Yes.
level. Okay, you get. So that daily mitigation will now happen proper. So this first
Okay.
change of character sometimes it serve as a fake change of character.
Okay.
Okay, you get. So that's why I
Yes, sir.
said I will wait for another break of structure to now happen before I can now take the attempt because where I'm going to is stiffer. So if I can catch just two trades from here to here, I'm okay. So you get.
Mm.
If I have two trades from here to here or
Yes, sir.
three, I'm okay. Because this is the daily high, this is the daily low. So when you see change of character like this, and market do not mitigate, even sometimes market will mitigate your POI in daily. But first change of character will act as a big change of character. It's more trap. But all those things come with experience in the market. Do you understand?
Mm.
So, but whichever trade you want to take, whether you want to take the first one or the second one, make sure it's your rules that you follow. Make sure you know that okay, this is the break of structure, okay, this is an inducement, okay, I'm waiting for a stream to take the trade. So that even if you lose, you will know that your loss is valid. You
Mm.
have to concentrate on having a valid more of a valid loss than invalid loss. What is valid loss? Valid loss are the loss that you had when following your plan. Invalid loss are the loss you have by not following your plan. Do you
Okay.
understand? So
Yes, sir.
you make sure that even if you are going to lose, make sure say you lose based on say you follow plan. Because
Mm.
every time that you are losing following your plan, you will get to a stage you won't even feel it again because you will see following your plan as a win already, as a derive fulfillment and joy in following your plan. Forget whether you win or you don't win. If you lose, it's part of the data that we said it will give you pay. Shey you get? It's not that maybe anything. It's part of your data. Let's say you have 50-50 win rate. It's part of the 50 that is not going to win.
That is it.
So you don't think say, I lose. Even if you lose the two, you lose the three. It's still part of the 50. The only time you can start having concern, maybe you are not doing something right, is when you now lose maybe 60 trades. Or let's say you are taking 10 trades, you can't lose, and you know that your win rate is about, let's even say your win rate is, you win 4, you lose 6. If you lose 6 and you win 4 times 3, let's say you are targeting 1 to 3, that's 12. That's 12% if you win your 4, clean 4. And if you now remove the 6 that you've lost from 12, that means in that period, in that 10 trade, you are out profitably with 6%.
Yes.
So 6% go far. If you are trading 100K account, 6% is $6,000. If you trade $1 million account, 6% is about 60,000. Do you get?
Yes, sir. Yes, sir.
So if you have $200,000, 6% is 12K. If you have 6% in a month, you are doing fine. If even 5%, even 3%, you are doing fine because you are not basing your win to. If you do 3% this month, 3% next month, let's say you have average of 3% throughout the year times 12. At the end of the day, you've done almost 30% in a year. If you do 30% in a year with each capital, it's enough. Most banks, they even they
It's
do
enough.
10%. If bank do 10%, do 8%, they will celebrate that year.
Mm.
So don't look at say your 3% is small. It's because you are trading small accounts. And
Yeah.
when you now understand that, you show your record. I've been trading my this is my documentation, this is my this is my this, and you train yourself to follow your plan to do everything. You know that bad at the bad, you will get also percentage. And even if you come up with a losing month, you know that the end of the year you will still be profitable. If you come out losing week,
Yeah.
you know that the end of the month you will still be profitable. So if you think
Yes.
long term, you'll be at ease to learn, to master this thing. The money will flow in. The money will flow in because the more you follow your plan, the more confidence you become. And
That is it.
when you have confidence to play straight, no go hard you. Whether market is playing drama, it's none of your business. Whether market is, you don't care. And one thing is, immediately enter your trade. What happened in between the trade, no concern you.
Mm.
You get
I,
what happened.
oh my God. God help me.
So
Break
for
even.
example, look at this. Look at this one. Let's say you take this trade here now, and you put your stop loss here. See what market have done. Let's say you even want to target here. Hey, you understand? See, market has given
Yes.
you good money, but because you feel say you don't want to lose this money, your mind is still there. You will
Mm.
move to break even. Market will now take you out of break even. Will now go and hit your TP. You see, and this
Yeah.
now look at the impact. This trade now supposed to now record for your win trade. It's supposed to be one of the 40% of the trade that's supposed to win.
Mm.
You can't sabotage the system. So this trade, instead of it to become win, you now end up being a break even. So now look at it.
Yes.
Is it the market fault? Is it your trading fault? Is it your strategy fault? No, it's your decision fault. Because those four that you're supposed to win clean to give you 12%, you still go sabotage them with your own emotion, with your own indiscipline, with your own fear, with your own greed.
Mm.
Then you understand, you still go sabotage. So that's why profitability is different because you don't allow the market to do the math. You don't allow the market to do its job. You don't allow your strategy to work for you. You are always interfering. You are interfering. Say, I don't want to lose this money. I don't want. But when you are backtesting, you know that if you place 10 trade, you will win so number. But when the market, you are now in the live market, you will now be interfering with that programming, with that structure that you already have. So at the end of the day, your 4 win trade fee end up in 6 loss, 2 win, and 2 break even. Those 2 break
Mm.
even supposed to be what? It's supposed to be
Good win.
win. So you see that your result now don't shift. So
That is
if you
it.
have 2 win, that's 6%. If you have 2 break even, that's 0%. Then if you now have 6 loss, it means that year, that month that is supposed to come up with 6%, because you break even 2 trade, you end up in no profit month for you.
Mm.
Do you get the idea now? Because if you remove the 6 that you win and 6% that you win and the 6 that you lost, that's 0, and the rest is break even. So you don't make money that year. It's not that maybe your strategy doesn't work, but you don't allow it to work for you.
Mm.
So for everything that happened in the market, it's not about the market, it's not about the strategy. But when the thing will change is when you now have belief in your system, when you have absolute belief, say, anything that happens, I'm ready to take it. That's when you now see that the market will start doing its job for you. The market will start working for you. Okay, you understand? So look at this setup now. This is the decisional setup for me. This is the decisional trade for me. See as market sweat me out. Okay, you understand?
Yeah. Yeah.
Hmm. This is where my plan. I know this is an extreme, but this is where my plan asked me to take the trade. I have my own plan and I have how I follow it. Okay, you understand? This is
Yes,
where he
sir.
asked me to take it. He's telling me to take the trade at the decision right now. There is a
Mm.
way I structure it that it will tell me when to take the extreme, it will tell me when to take the decision. Remember, I said decision has low probability. So you
Yes.
understand? But you see that when we are doing the market now, you see some decisional PO I still hold.
Yes. Yes.
So my system tells me if you just do this, don't worry. So look at the second one that I set limit for. You see, this this is the inducement. See where my limit order is. I missed this trade.
Mm.
You see that market
Yeah.
sell down. It did not tap me in or my MT5. Exactly where the market is where my entry is. But the
Mm.
spread, the gap, did not close me. So you see that the first one I showed you swept me out. But assuming that this one now, this is exactly when this setup to my plan asked me to take the trade. And you see that this one now is like extreme. It's like extreme order block. The only
Yeah.
other block that you understand. So you
Yeah.
see now. So you see, I lost that one, I missed this one. But it's not my fault.
Mm.
You understand?
Yes.
It's not my
Yes.
fault.
Yes. Yes.
So I don't need to be beating myself and to be saying this. No, that's how it is for me. I don't have problem with whatever the market is doing. I will reposition. If this one go now, I will look at this in my board. What am I going to do next? Yeah, position here. I will do it. If this one too want to come back, I don't care. I'm not going to shift my entry. I'm not going to. If you want to come back and mitigate me, fine. If you want to go and create another structure, I will just look at my board. What am I supposed to do? Yeah, reposition here. That's all. Sure, you understand? And I will go. So that's just it. Like this one now, you see that this is an extreme order block. Before market break this, but this is the decision. You see that decision I hold. That's all. So that's it. I hope you enjoyed this.
Yes. I enjoy it so much. I enjoy it so much. There's a lot I learned.
So so
I
that
enjoy it so much.
that's it for the market. There is nothing there's nothing special in this market. There is this you just need to just get this strategy because number one thing is strategy. Then once you are able to figure out the strategy, then every other thing is on you. It depends on you, not the market, not
Mm.
anything. Yeah, you understand.
Mm. I'm praying that
By
may
that
God help
time,
me. At
you
this
said,
time, at this time, I'm committed. I'm no longer going out for work. I mean, though, I want to learn. I want to understand it very well, and I want it to work for me by the grace of God.
yeah, once you understand it, you will get to a stage you will become boring because what will make it boring is because you will see that you are, for example, now you know that this is where you want to buy, and market is taking time to do all this drama. This is where you are waiting for. You can take days. You will not even take care about this market. You just go and look for another pen. Maybe you are taking 3, 4, 5 pens. You go and look anyone that is right, you position for them. And if the five no right, what are you supposed to do? You fold your arms and be doing your other things. So that's
Yes.
what makes it boring. But before, whether you right or you no right, you go sharp figure out straight. You go jump on one trade. You go want
Mm.
do something. So a lot of people will sit down a whole day, they will think that's the work. No, the work is doing what you're supposed to do. If what you're supposed to do is to fold your arms and leave the market, that's the job. That's the work. Gong, gong. I
Mm.
don't know if you get.
I get
So
you.
people think they blend activities with productivity. No. If your strategy or your plan tell you that do nothing and you do nothing, you have already done the job.
Mm.
Okay, you get. So it's not about 2 days. I haven't seen setup and this thing. You will want to manufacture setup, then you will get punished for it. Okay, you get. So
Yes,
those
sir.
are the jobs. So it's not about until you click buy, sell, do analysis, do this, do this. No. So don't compare your setup with other people. Don't, don't look at what other people are doing. Even if you are looking at it, don't let it influence your own. Okay, you get.
Yeah.
Don't let it
Yeah.
influence your own. Like me at this stage. There's one broker that contacted me and they said, and so that they also have a academy if I want to learn and so on. I said at this stage, I'm not learning. There's nothing you want to teach me again. Okay, you understand? So just hold your academy. What I've known enough, my experience is enough to be profitable in the market. So I don't need to learn anything. I don't need to. All I need to do is to 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 master what I've known and to now develop the mindset to use what I've known to make money. That's all. So stop jumping from strategy to strategy, mentor to mentor, looking for someone from one place to another. It's not going to help you, and you can never be profitable doing that. Okay, you understand? You
Yes,
can
sir.
never make money doing that because what you will start getting confused. And you know what you've learned some years ago will still be affecting you. So you have to unlearn a lot of things. If you are
Mm.
teaching support and resistance trader, everything I'm showing you now, what you will be seeing is support and resistance. Because that's what his brain has been programmed to be seeing. That's why I said trading is about perspective. Yeah,
Yes.
you understand? For example, that lady that you said you watch and you follow for some time, that is,
Mm.
I forgot her name. Yeah, you understand? If I'm
Yes.
telling her that This is the extreme. This is why this place is holding. This is why it's not. Is that a thing that she has known for a while? That's what she will be saying of that. And likewise, me too. If someone is telling me that, okay, you see this flag pattern, you see this head and shoulder, I just dey hear am. Everything I'm looking for is where's my POIs, where's my extreme, where's my decisional
Yeah.
POI. I can be seeing
Ah,
the pattern though, but in my head, that's not what I'm seeing. I'm seeing
yeah.
that thing that I know.
Mm.
So if a moving average trader, someone that use indicator like a moving average, if you are explaining something to him and he has seen a mentor or they taught him or he has watched a lot of video on moving average, until you click moving average, that's when we have confidence. Say, okay, let me see how moving average operates here. Because
Mm.
it's what you want to see that you will see in the market. That's why two of us can be looking at the same market. Some will be seeing buy, some will be seeing sell.
Yeah.
So you understand? Because of what? Is perspective. So some people will be like, there's someone that asks, how do I know that this is where the market will get to before you return? How do I know this? How do I know this? I say it's years of experience. That's not how I need to start it. I got confused most times. I don't know. I don't know where to start. Where how do they I'll keep wondering. But after I do the job, screen time, a lot of studying and so on, I'll figure it out. Say, okay, okay, okay. Okay, you understand?
Yes,
So
sir.
that's it for
Actually,
that's it for
I actually love this strategy. I, I love it very well, and I believe I will learn because I love it. Let me put it that way. So,
I think it's because as I said, there are a lot of things I can teach you when it comes to SMC. There are a lot of strategy I can bring out from SMC.
yes.
If I want to be day trading, there are a lot of, but I've done section liquidity, section trading, Asia, London. I know all those ones. But I think what make me to be a swing trader is because of the person that I first learned from.
Okay.
So, and maybe it's also because of it's my personality, is the kind of person I am. I have a friend that he can't hold trade for days. For me, I can have a position running for 1 month. I don't go shake.
Ah, 1 month.
Hey, you
That's wrong.
understand?
It's really
Yes,
fast.
of course. I have a position that is running over 40 days now.
Ah, ah.
And not that maybe the trade is giving me money. It's just ranging after I execute that trade. It's just moving, ranging, moving NZD, USD. Let me show you.
uh, that is. I don't also like a smooth trader. I don't.
No,
I
see, it's not that maybe that's how it is. Look at this
yeah.
trade. This first trade. Hey, I was explaining to someone. That's why I put this now. Hey, you understand? Look at
Yeah.
what I saw. Break of structure. I discovered that we have tiny inducement here, but I know that market can use this as instead of a POI, you can use this as a major inducement. So, and I decided, okay, if this is not going to hold according to my plan, because my plan actually asked me to sell at this level, anything at this level. Okay, you understand? So
You
I
know,
said,
see,
okay,
sorry, sir. Your screen is not moving again. No. It's still on that GBP.
okay, let me check. Let me see. Share screen. I think I've shared this screen.
Maybe it holds.
What
It
about
should be net.
what about this one? Is it moving now? Maybe
No,
it's
no, no, no.
network.
Yeah,
What
maybe.
about like this?
No.
But it's moving from me here. I have another.
Yeah, the screen just stopped here on that GBP AUD. And of course, I was seeing it at this move. It's no longer moving here again.
Okay. And maybe you should exit and rejoin because I'm looking at it from another screen now and it's moving, it's responding. So it might be your network.
Okay, that's changed now. It's changed now. I'm seeing it.
Okay. So look at this. When I enter this trade, this is my decisional POI, and that's the level that my setup asked me to take the trade. But
Okay.
I know that markets might use this as so I decided to give it a little because I know I'm doing the swing and
Mm.
it's going a long way. So I don't want to use
Okay.
tight stop loss like putting my stop loss here and no, I don't
Mm.
do that. So I just want to
Okay.
give the market reason, like a space to breathe, so that if I lose, I will not say no because I use stop loss, tight stop loss, and so on. And look at this. Look at something. This is the day I entered this trade. This is the day and this is the candle. Look at how long I've come. 46 days.
Ah.
And it still never hit my TP. This is it, 46 days. Okay, you understand? Although I'm in break even. Okay, you understand? So you
Yes,
see,
sir.
when market breaks structure here, what do? I mark my inducement and I mark my decisional POI and this is my extreme POI.
Mm.
Okay, you understand? But my setup asked me to sell at what? At the decisional, like this. That's the
Market
purpose
counted.
of it. That's where my
Okay.
setup asked me to sell, not extreme. But look at what I did. I sold at decisional POI, but because I know that I'm going far and the stop loss is not, so that's why I didn't put my stop loss here. If I put my stop loss here, I would have been in TP by now. But I
Mm.
decided to use my stop loss to put it at the extreme structure because this is our high, this is our low. You understand? So I have
Yeah.
two positions running. This first position, this second position. See where I'm positioning again. This is in break even, this is in break even already. So I'm also positioning here again. You understand?
Oh
Because
my
look
God.
at it. This inducement, this is our decisional POI. But this time, my setup asked me to sell at the extreme. That's why I set my limit order here. So this is in break even. This is in break even. So if market enter here, and luckily for me, it did not take out this break even, then I'll have three positions on. Then if everything now hits TP, then that will be 1, 2, 3. 3%, 3%, that's 9%.
Mm.
Okay, you understand?
Oh my God. Yes.
So, so as a swing trader, I don't care. No, let's say this one even hits break even, but mitigate this one and enter. It means that this one will hit TP, 3%, 3%, 6%. I'll be fine. This one break even.
Okay. But then with these positions, you are still trading order. You still order setup. You still take them.
Actually, if market come here like this, if market do his nonsense, come here. If market do his nonsense, come here. I will enter around now, straight. I don't set
I'm talking
limit
about,
order already.
I'm talking about other pairs.
Other pairs. Yes,
Mm.
of course. Because this one now na empty bullets now. This one I'm not risking anything. I'm not risking anything.
Yeah.
So if I
Okay.
have another setup, why am I not like this
Okay.
GU now? Like this GU now. I'm still holding this. When market got to my 1 to 3, I knew that we are going far. That daily change of character will happen. And I just closed half of my position and I extend this
Mm.
to this level. When it got to this level, I knew that we are still going far. Why am I going to close it when I know that we are likely to come to this level? This level. Why
Yeah.
do I need to close it? I've taken something out of the market. So you get,
Yeah.
I've taken something
Yeah.
out of the market and
Yes.
I allow the market to do its thing because I've projected long time thing to the market. It's not always all the time, but why this one look like this is because let me give you an instance. Let me give you an instance. You see this one. Let's say I'm risking 3%, the way that was risking 3%, or the way let's say my risk appetite is 3%.
Mm.
At this level, I will let's say I've closed 1% out. This
Okay.
level, let's say I've closed 1.5%. It means that I've closed about 2.5% of this account. And
Yes.
1.5 remain here, 1.1 remain here. It means that all these trade are risk-free trade. So what will now happen if this market now come down here from here, or let's say from here, now come down here? Is it not going to worth the waiting? So if I have this, I don't need to be trading every day. I don't need to be
Yeah.
coming to the market every day. Okay, you understand?
Yes.
Just imagine, say this entry now, this entry is $20,000. This entry is $20,000. So at the end of the day, let's say all of them give me 90 is 9%, which is this one will give me 20 times 3, 60. This one will give me 60. This one will give me 60. Okay, you understand?
Oh,
That's
yes.
100. So if I don't trade for 3 months and this thing deliver, is it not making sense?
This makes sense. If you want it.
It's worth it. So that's the long time thinking. So because I'm trading small account, 100, 500, 1,000, all this small money, that's not my thinking. I'm thinking of when I will have my $1 million account, when I will have my $2 million account. Okay, that's the mindset that me I'm using to trade, not this small one that we are doing. Okay, you understand? So
Yes.
if I can hold my hands for 3 months, all I do is to set my limit order. All I do is to just once in a while come and monitor the trade. And at the end of 3 months, market deliver me like $180,000. First of all, I'm much better because I'm less stressed to get that
Yes.
money. I'll be doing some other things. I will have time for myself. I can
Yes.
look at this one and just close 5K from it, go on vacation or just go do what I want to do this day. Yes, now. And that's how market works for you. Not that you
Uh,
will now be working every day sitting. The essence of trading is for you to have freedom.
yes.
And if you are not having that freedom, then that means you are slave to the market. You run from 9 to 5 that you want to. So if it requires you to always be in front of your screen every five or every day before you can make money, you are nothing but a self-employed.
Mm.
Okay, you understand? You are just nothing but it. But the goal is not self-employed. The goal is to look at trading as an investment vehicle and just catch that trade that align with your plan and let the market do its things and let the reward come. That's all. Okay, you get so that's why me I like swing trading because I can easily leave the setup there and be doing his thing. I'll be doing my thing. If you want to pay me, pay me. If you want to do his thing, if this one is running, I have another setup that I can engage. Okay, you understand? So
Yes.
that's all. Okay, you get so that's just how it is. Like this one now, I had this setup. I think I shared it. I bought this trade from here. I shared it now from here. Put stop loss here. Target straight. You get?
Yes. Sir.
Is it not the same thing we have been discussing today? break of structure, inducement, market come to this level. Sure you understand. This is our leading POI. I will still teach you about that. Sure you understand.
Yes, sir.
Sure you get and you can see I execute the trade. And the market
Hi.
has been balancing.
Okay. Hi, God help me. Oh.
Sure you understand.
I
So
really have
just
knowledge. I'm really grateful. Hi.
so it's just the two. This is type of trades that some people will catch and they will be shouting $10 million, $1 million trade that they made 1 million.
Mhm.
But these are the
Mm.
type of trade that I'm catching for free. It's just that they are risking high. Me, I'm not risking high.
Yes, yes,
Hey, you
yes, yes.
understand?
Yes,
So,
sir.
but it's anybody that is carried away with that, is still carried away based on is looking at the money. Me, I'm not looking at the money. I'm looking at how to perfect my mind, my mindset, and my my skill set. Hey, you understand? Skill set
Mm.
is not the chart. Skill set is the awareness aspect of it. Hey, you understand? Look at this trade now. At least I've been in this trade. Look at what he has given me. But it still went back to my entry. But do I panic? No, because I know that my structure is intact, and what was I will lose 1%. Do you get the understanding now? I think you've gone again. I can't hear you again. I can't hear you. Can you hear me? Is it my network?
Wi-Fi. Got off.
Okay.
Just turn on.
Yes, I
Turn
think I
on.
can hear you now.
Yeah.
So this is AUD, the same thing. Look at how long I've been on this trade. But this thing doesn't really bother me from this day to this
Ah,
period.
okay.
So two position, almost over a month, just two position. But if I stay
Mm.
2 days, if I stay 2 months, and market deliver me 6%, I'm okay.
Yes, yes.
The way the 6% will now make sense to you is now when you are using big capital.
Mm.
If that's when it will make sense to you. But if you don't understand